Date for Wednesday, January the 4th of 2017. This is George Papazov, owner, founder here and head trader at Trade Pro Academy. So here's an update trade from our trading floor. We got a lot to talk about today. A lot of stuff is taking place in the equity markets that could impact us going forward. A lot of stuff in the news as well, and we got a big key event today. I want to remind you that the presentation here that you're seeing is for educational purposes, not to be taken as investment advice. The risk of trading markets can be substantial. You should carefully consider if doing this is suitable to your own financial interests or situation. We're not responsible for any liabilities arising as a result of your market involvement or individual trade activities. The lawyers are happy. I'm happy. We can move forward. Today is an interesting day. We're going to talk about why. Let me pull up the chart of the SP 500 as we start out this conversation. Here's what's happening. Equity markets are taking a bit of a rally. So through yesterday, we closed strong. We were weak in the first part of the day. Then we got really strong in the afternoon. And today that strength continues upwards and onwards, and volume is starting to kind of come in. So here's some stats for you that I ran this morning. About 17,000 contracts have traded on the S&P 500 between these two levels. I'm going to show you where they are. All right, I'm going to go to price. Heck, we could even just do price. Yeah, here we go. Between the levels of 61.5 and 64 even, we got 17,000 contracts that just got long. All right, that represents about 2.5% of the session volume so far. And 61.5 to 64 should be a good area to see as support. We should build out some volume here. It's going to continue upwards until about 66 even. That's kind of where I got my target and my eyes on this price movement. All right, that's the futures. Now, looking at the actual index, it's off to a really, really good start for 2017. All right, open low, continued higher. I think we had a lot of longs up here that we had to let off the boat. Far too many people took part in this post-Trump rally, and then we had to shake them out by the end of the year. So we weren't able to get these 2300s that I was looking for earlier or late in last year. I think we're going to tap them early this year. I really do. I think 2300 is on deck here on the way up. On the Dow, if we look at that, now it's currently just about 70 points or so away from 20K. So those Dow 20K hats, keep them handy. You might need them. Okay, but back to the S&P 500 for a second. I want to show you a lot more in-depth analysis on the S&P 500. So you can see some of the strength and resilience. Any dips keep getting bought into. All right, the post-Trump rally is happening. If you map some fibs here from the 2016 low and you extend that out to the high in the summer doldrums here before the Trump election happened, all right? So the pre-Trump election high was around, where was it? It was about 92.8, so 93 even on this, on the index. Okay, that was the upside trajectory to it. Well, then we kind of retrace and let some steam off, let some longs off the boat, as you will. And if you map a fib retracement, this is a trend-based projection. I know a lot of guys draw fib extensions differently. Those ways don't work, all right? You need to do trend-based Fibonacci projections. You need to go A to B to C. If your fib extension only allows you to click 2 points, it's not a good fib extension. Okay, so if you extend that out, because we're onto all-time highs, there's no way to project overhead resistance because it hasn't traded there yet. All right, what's going to happen now will be overhead resistance for the future, but we're not trading the future, we're trading the now. So when you extend that out, 0.618 of that extension happens to be 2276, and that's why we saw a lot of resistance up and through this zone. Above there, we can see 2333. That's the upside target. So if we get enough momentum, we can rally up to 33, 2333 even. All right, and I think the one thing that I'm a little surprised about today is it's happening on lower volume. Now, when markets move up, all right, and volume is kind of weaker than it has been. Yesterday, we had some good volume. Today, we're seeing not as good volume. On the futures contracts, what are we at? We're holding 700,000 so far. 700,000 contracts, and the session is halfway through. At this point yesterday, to put that in perspective, we're about 1 million contracts. So we have lighter volume today. That's all that says. Lighter volume, but on the upside, that's okay. You know, you don't usually get a lot of longs near these highs on high volume. So it's not a reversal indicator, the fact we have low volume. But if we had a sell-off on low volume, that becomes a reversal. All right. So sell-offs are more interesting with volume. But I do think we have enough catalyst, enough fuel to the fire to get some highs up there. All right. At 10:30 a.m., I know it's a little dated now, but New York Stock Exchange volume was 9% below the 3-month average. NASDAQ's volume was 5% below the 3-month average. The advancers, or the stocks that are making upticking, that are making highs, that are advancing and going higher, led by 3.9 to 1 on NASDAQ and 2.8 to 1 on New York Stock Exchange. So basically what we're seeing here is market breadth participating. We're seeing more stocks hit new highs or tick upwards than we are those going down. So when you see market going up on weaker volume, you better have good breadth. And we have good breadth here, and that's what's kind of sustaining this upward trajectory and upward momentum. All right. I'll show you another indicator you could use for market breadth is the indicator here on TradingView. And you can literally run it on SPY. It doesn't have to be the SP 500 index. I am doing it on the index, however. All right. You can see the index value here. Actually, it does have to be an index. Take that back. But look at this. After climbing down a little bit from mid-December on this retracement, what we're seeing is stocks starting to participate again. We've taken out this high. So when we had a high in the market, we had about 79.5% of stocks in the S&P 500 trading above their 50-day moving average. That's a great thing. We've now taken that upside out. All right. Stocks are participating. 63.5% are above their 100-day moving average. So leaders to decliners are moving upwards. It's a sign of breadth ticking up. Number of stocks above their moving averages is moving upwards. It's a sign of upwards momentum. So be careful fighting this thing. It looks like it wants to stay strong. It looks like it wants to tap 2,300. Dow looks like it wants to get into these 20,000 evens. Okay, it's leading. Russell is also on fire today. Massive day. Huge rally as well. Okay, so equities look strong. I want to show you another interesting thing. The USD Mexican Peso. For those of you that are trading currencies, wow, Mexican Peso is getting shellacked. It just broke out above, where the US dollar got stronger, more than an all-time high. It took out the all-time high in the US. Mexican Peso's all-time weakness versus the dollar based on Trump's presidency. We know he doesn't have favorable policy towards Mexico. We also know that he forced a Ford plant. They had a $1.6 billion projected investment. They wanted to make it to Mexico. Trump said, do it, and I'll slap a tariff tax on you. I don't think I've ever seen a president this involved with individual companies before in my life. It's risky measures. He's not there to run Ford and jawbone everybody. He's there to do more future policy. And I read an interesting article that said Donald Trump's presidency is going to be done 140 characters at a time. Another guy said foreign policy shouldn't be 140 characters in length. Anywho, point I'm making is the talk from Donald Trump against Ford ended up resulting in them canceling their $160 billion investment, and they're instead going to put $700 million rather into a plant in Michigan. They're going to expand it. Okay, so that's a win for Donald Trump. It's at least it's a win based on the platform he's projected to the people. Was it the best way to do it? Probably not, but it worked, I guess, and that's one thing that Mexico hasn't been too happy about. All right, which that's kind of what caused this Mexican peso to slide off the rails and continue its weakness. As the dollar is strong, the peso is weak. That's why this upwards line is actually weakness for the Mexican peso, good for the dollar. All right, that's what's going on here. In terms of other markets, oil rebounding off these 52s. I found a chance to get long a couple contracts. I'm long 4. All right, I'm long 4 contracts here at 52, 53. It's kind of where I've been watching for as a buy level. I got some good returns today. I'm going to keep it up and work my way out of this position. I want to be back to cash by the end of the day. All right. That's oil at 52. Then we got some upside trajectory. I want to be cautious on oil, though. I want you guys to be cautious as well, and I'll show you why. All right. There was talk yesterday. Part of the reason the catalyst went down yesterday was that there's talk a lot of these oil production cut agreements aren't being adhered to. All right, they're ramping up production. And now that it's January, the accord that they agreed to should be in play. We'll see what happens. I don't think anyone's going to cut their production. I think they ramped it up to announce a cut, which is larger than average as a net, but that's not how people see it. People see it emotionally as a cut. All right, it's not going to have an effect on supply. Oil, however, is back up. It's in the middle of yesterday's nasty slide. Watch above 53.5. It has to break out here on volume in order to continue upwards. All right, that's my call on oil here. Watching the dollar, US dollar sliding off at these 103s. Very tight knit up here in this consolidation rectangle. I think below these 102.63s, 102 halves, we touch 102 again, where it has to hold as support. That's a key level. Below there, we're sliding down to 101. It's as simple as that. All right, there's some bearish pressure on the dollar, and that's helping out assets like gold, assets like oil. All right, and surprisingly, not so surprising actually, S&P is also up. And you have to remember, until recently, the correlation between the S&P and the dollar has been positive. That's usually not the case. I told you guys to end last year, whenever the US dollar moves in sync or lockstep with the SP 500, bad things have happened. All right, either the S&P's fallen off or the dollar. This is not a correlation that should be correlated in a positive fashion, but it is. So I think what's going to happen is the dollar is going to shake out, keep going weaker, come down probably into these 100s to 101s to find support. That's going to put upside pressure on oil, upside pressure on equities, and upside on gold. It's going to continue to climb. Okay, it's interesting to see gold move with S&P together in the same direction. I think everyone in the end of December 2016 went to cash, a lot of institutions, and now they're chasing to get back into the trend. Okay, that's what I see for the outlook. I wanted to look at gold with you guys and currencies, and then we'll call it a session, and we'll go to the subscribers to talk about some trades and trading zones. I got some great zones for you for today. You could still make money. The day's not over yet. Let's go gold analysis. Any questions, guys? Comments? All right, here's the price of gold. As you can see, we're at 70, which is around the mid-average. The mid-average about 60 for the gold to silver ratio. Those of you that don't know what that is, it's simply gold divided by the price of silver. It's nothing magical. But that's a ratio that we've seen honored, and about 80 to 85 is a high, 50 to 55 is a low. So we're kind of trending upwards. Gold is gaining strength against silver. Interesting thing to note. All right, what I want to show you here is we said 60 yesterday was a magic marker. Above there, we want to start buying. Well, today we got above these 60s. Okay, yesterday we got above them as well, but we sold off into the close. On today's open, we got above 60, but we really didn't see volume coming in until about 62 or so. And now we're consolidating and building out a volume profile here on gold, as you can see. All right, here's the gold futures. So between 62 to about 67, you want to try to get long, try to pick them at 64 to about 62 even. That's a nice value area low, but be careful because as prices started to go up, volume declined. As prices started to go down, volume started to get excited and interested. All right, now we saw a little bit of a rebound trying to happen. Volume's weak. I think we could have a selling wave coming in and coming back into the point of control right here. You see how we have this naked POC? A naked point of control makes a natural support. This means point of control is the level at which the most amount of contracts traded for the day. So you can see here on the 28th of December, this point of control is extended out for 2 days. But on the second day of Christmas, my true love gave to me, price dropped and actually touched that POC down to the dime and rallied upwards. Okay, you have to map these kind of data points on your charts. If you're not looking at session volume profiles, you're not going to be doing well in 2017 trading. I'll tell you that much. All right, so look at 50 even down here. I think that's a natural target for a support. We get all the way down there, I don't know, but it's a naked POC, and last time it touched it. And most POCs get traded to and through. All right, you can see this 40 hasn't, this 32 hasn't, but it's an uptrend. So that's what I'm looking out on gold. Notice the rally happened. I didn't get a chance to get it, but I did get long oil. And now it's holding 53. it's going to retest it. So be careful out there, guys. A lot of assets are rallying. It's on thin volume. I think it's too late to buy this rally now. If you've already missed it on equities, wait for the dip. I don't think it's too late to buy oil, but you need to pick a really good level, and we're going to talk about that to our subscribers in 1 minute. I'm going to give you trading zones on the SP 500 on oil as well. Too late to short the dollar. Oh, currencies. I want to talk about this very briefly with you. Yesterday we talked about weakness in the euro, or sorry, weakness in the US dollar versus the Australian dollar. This is continuing. If you had literally just shorted the euro and bought the Australian dollar yesterday, you'd be making money because you're going with momentum. In currencies, you do not want to fade momentum. Only on news you could fade momentum. You do not want to take counter trend trades in currencies on a larger than or on a smaller than hour chart. Go for it on a 15-minute if you want. If you want to catch a couple pips, go for it. But overall, you need to play into the trend or you're going to get murdered. That's not the market you want to be fading. It's a very trendy market. So your US continues to slide. Aussie dollar is strong. Canadian dollar is strong based on oil strengthening. Watch that. All right, get long currencies on the back of short dollars, US, and you're going to do well in the next couple sessions. Speaking of which, here's some major currency pairs. Euro rebounding off these 104s. All right, dollar Jap yen finding resistance at 118. This is a level I've been trying to sell for a long time. I'm going to start getting short on dollar versus Jap yen. I see a drop coming. All right, USD CAD. This doesn't help me because I get paid in US dollars. I'm Canadian. I converted over to Canadian, so this means my paycheck is just getting slaughtered a little bit. That's fine. I have to make more. All right, here's the Aussie US. Told you it's going to happen. It's rallying. Again, here's the theme of 2017 to start off. Dollar weakness at the moment. Okay. Energy market, energy complex strength, equity strength. But so far we have low volumes. And I don't think this early on in the year you could call it a long-term rally. Just be cautious. Watch around these 75s. Price is already reversed, as you can see on the S&P 500. All right. Starting to get sold off right into my trading zone. I'll talk about that in a second. All right, YouTube. Hope you've enjoyed this update. I want to invite you guys to sign up for a trial of our subscription, of our paid membership. You get a lot of value out of it. Everyone that's joined is extremely happy with it. For the most part, I haven't received an email saying otherwise, but we got a lot of great tools. We got a lot of great education. We have live analysis, trade ideas. We post a live futures course that teaches you how to day trade like the professionals. It's basically a course that if you join Goldman Sachs on the trading floor, once they remove Dodd-Frank, that's what they would teach you. I'm going to teach you the same stuff. You get premium tools. It's a great membership, a lot of courses. I invite you to try it out. It's free for 14 days. Go to tradeproacademy.com, click the link on the YouTube video /pricing, and you can sign up and go from there. All right. Have a great session. Be careful. Manage your risk, and you're going to get paid. Take care, and I'll talk to you guys tomorrow at tomorrow's midday update. All the best. Email me if you have any questions or concerns. Goodbye.